welcome to Real Estate with Ryan, and thank you guys for tuning in on a Saturday. So excited to be with you. You're going to love today's show. It's a good one. It's a hot topic. We're talking about the real estate market. Is it cooling off? Is the market going down? It's spring market. Sales should be booming. Where are we at? We're going to talk about all that with Real Estate with Ryan. Thank you guys for tuning in. But as always, before we start this show, we've got a lot of congrats and we got a lot of new listings coming on. So we're going to talk about those. Let's talk about some new listings. 421 Duncan Street that just hit the market. You want to check that out, especially if you're an investor. Got 2 properties on the actual home. Same lot, perfect opportunity for some rental income, really priced well. Make sure you check out our website at ryancoleman.org. Some congrats on Regus. We told you we're sold out, so we're selling those. I think we closed out our last couple ones this week, so congrats to those guys. Helped some great buyers with their condo down on 445 West Blunt, 2-bedroom condo down there. It's a really great young lady and her purchase. And thanks for the family's trust on such a big move. So we're excited to help Sarah and her big move down there. 650 Old Lake City Highway. Congrats there. New pending on Lake Arcus, under contract, large luxury lot. Under contract, I think, a couple days, maybe a couple weeks. Pretty excited about that deal. 305 Boner Road is under contract. Congrats. 159 Dusty Lane. Congrats. And we have more, but we're going to talk about that on the segment. So as you know, if you've been following the market, a lot going on in the real estate market. Had some great clients that we were out in Maryville yesterday, and we were showing a property. It was on beautiful 5 acres, had mountain views over in the back. And it just didn't work out for him, but we were kind of talking about the market. And him and I were having a little chat this morning. And I think as you guys watch the news, news could be a good thing or it could be a bad thing. Usually never too much positive on the news. That's why we do this show. We say, no politics, man. No politics. Let's just have fun, talk about a little real estate, whether you're investing or buying, fun stuff for us. But he said, Ryan, I was watching the news, and he goes, with the recession coming. I said, oh, let's not talk about the recession. But that was a real topic. And he said, well, what's going on today with the recession and things that they're projecting out? We may stay put. We're just not sure. And I think that's probably where a lot of people that we felt this week or last couple of weeks is, where is the market going? Is the real estate market now for 2022? Is it the hottest it's ever been, or is it cooling off? And that's what we're going to talk about today with Real Estate with Ryan. Is the market cooling off? So to kind of go over some things I kind of just wrote down and kind of thought about some different news articles on what's going on across the country is, obviously the interest rates are going up. And as I talk to a lot of people about the market in the real estate industry, remember, we are coming from a market that we are beyond blessed by interest rates being the lowest that we've seen in decades. We've had rates that were, I wanted to say that I helped a doctor and he was right under 2% for, I think it was a 20-year, maybe it was 15, 2% rate. Those things are unheard of. We've never seen anything like that. And obviously now the rates looks like about 5.375 for a 30-year. That's what we're projecting the rates. And, those things are going to change. We know we couldn't be there forever, right? We knew that the cycle in real estate, right, guys? Real estate is a cycle. It's a season. One of my great clients was telling me yesterday, if you buy real estate, it's all timing. And we were talking about his property that we're putting on the market, and it's timing. The right place, right time, right buyer, right opportunity, right marketing. You get the right team working for you, and you sell it. Sometimes you don't have all those factors put in, and the timing's not there. But in this market that we see, that is it cooling off, we do know some things. That it's the lowest, the houses is the lowest since 1999 as far as inventory. So that's pretty low, pretty low. And as in the spring, we know that that's the busiest time in the marketplace. One of the other agents that I was talking to, we're doing a little networking. So just because the rates have maybe come up a little bit, doesn't mean you have 15 offers. Maybe you have a couple, or maybe you just get one that is that right offer. I think that's a normal market, right? I think you start getting back to where the prices are just getting so costly. Everything's so expensive on everything. Some buyers are going to leave the market. And it's going to happen. What does it take to the refinance market? A lot of people a year ago was the refinance boom where the rates have kind of went down. But the refinance market is down 71% year over year from last year. So a lot of people that were in the market that were going to refinance had an opportunity. They're out the marketplace. We wondered on some of the things with the market that I thought was really, really impactful with the rates kind of increasing. Where do we see adjustable rate mortgages? Well, we see that they have adjusted and actually doubled for applications for adjustable rate mortgages in the past week. And mortgage demand hits the lowest level since 2018. But a lot of that, guys, is a lot of people have refinanced, were in the market, have bought homes, sold homes. And so a lot of that data means that they're just not in the marketplace. So obviously, when a lot of people have taken action with the really low rates or purchased or upgraded their new home or downgraded and kind of downsized, some of those numbers are going to decrease. It just happens. And then we talked about the interest rates looking at about 5.375, and that's for a conventional 30-year with 20% down. I did want to say, didn't forget, congrats to our new buyers over there on Sherwood Drive. So happy to help them on their new purchase. And along with, we talked about Sarah with her Blunt Avenue condo. So congrats there. So didn't want to leave anybody off with our great clients there. But what do you think in the market, guys? We know that the average price of homes across the country have skyrocketed, that the average sales price is $375,300. So an average price of $375,000. I think I'm going on 23 years in the business. I don't think I've ever seen it so high. We do lock boxes, some of the lockbox data that the National Association of Realtors tracks shows that across the country, we're down 19% from a year ago. It's not unheard of. And so what does that put us coming through this year? How does that lead us to the adjustable rates? How does that tie with what the Fed's doing? What are you going to do in this market? I think one of the biggest things to concern, whether you're a buyer or a seller, have to understand that some of the rates that are causing some buyers are going to actually come out the marketplace, right? It's going to happen. So we're going to lose a certain percentage of buyers in that market. And some rate locks, if we can't find anything, those are expired. So these are things that you have to think about. Nick, my marketing director, was giving me some great advice and said, hey, don't forget about our great THDA or our USDA loans, because we still have some of those loans that are income restricted, along with some grant money that's still out there, especially during the COVID process, that still may be able to make it affordable to buy the right home in the right area. And the right area obviously depends on some of those, like USDA. There's certain restrictions that you have to meet their area and their map, and we can help you with that as well. So is the market really cooling? I don't know. I would say, if I'm just coming back and kind of looking at our sales, we are extremely, extremely busy. But what I would say is with the information, the news, and everything that's going on, I do think it causes buyers concern. And I do think that in this market, as we proceed the rest of the year, we have some supply issues with the builders and a lot of things going on. If those supply issues gets fixed, the sad thing is I don't think that the builders are not going to immediately pass the savings on to the consumer. So that leaves the buyers really wondering, where do they go? What do we do? And at some point, do we pull out the market, stay where we're at, or don't move? The biggest challenge that we face today, and probably have faced over the last 2 years, is we have great sellers. We're selling their home, and we got to find something. And us finding something is the key. It is the biggest challenge that I'm working with probably 5 or 6 people now. We've sold their home, and we're placing them in new properties and trying to work with multiple offers or properties that have competing. So we're still seeing in the marketplace that there's a lot of competition. I don't think it was what it was last year, but that's not to say that the market is changing. One of the biggest questions we ask sellers and buyers where you're moving in 2022, and I say, regardless of the interest rates, right? Regardless of the interest rates, what the home down the street sold, right? How many bedrooms, how many baths, did the kitchen updated? What's your reason for selling, guys? What's important? What's that move? And is it a must move or a want move? I think that's a big key. Do we need to downsize or do we have to downsize? Those are big keys in today's market. So I think those needs to and wants will always be in the market. And a lot of people that are stepping down or moving the wants to kind of upgrade in price, some people may pull back because the numbers just don't make sense. We've got so much more. We're going to talk about this with Real Estate with Ryan. We're coming on a break, but guys, stay with us. We've got our vol update right after this.
Knoxville and East Tennessee. The region is known for its rolling hills, rivers, and lakes. There's no better place to work, live, or raise a family. Home is where your story begins. Buying or selling your home is a big decision, and you need a real estate team you can trust.
I'm Ryan Coleman with Hometown Realty, your hometown experts. Whether you're buying or selling a home, let us develop a winning game plan for you.
Hometown Realty is East Tennessee's #1 real estate group and a proud sponsor of the Vols.
Your friend promised we wouldn't be homeless.
He promised. He's doing everything to fix it.
You need to call and have him fix it now.
Hey, man.
Found us a house.
No, not yet. Let me call you back. We're working on it.
Ryan Coleman with Hometown
He
Realty.
says he's doing the best he can do, honey.
Well, he's taking too long. I knew we should have gone with Ryan Coleman.
Choosing the right agent is never easy.
Call your hometown experts. We'll take care of all the details and make sure you don't get stuck in a motel. All right, welcome back, guys. We're talking a little real estate with Ryan. Thank you for tuning in, and thanks for staying with us. We're talking about, is the real estate market cooling off? That's what we talked about in the first segment. And if you're tuning in for the first time, my name's Ryan Coleman, Hometown Realty, owner, founder, and proud sponsor of the Vols. So before we get into our show, got a quick 60-second Vol update. We're going to talk about the Vols, our great Vols, and what went on this week. So we got, all right, congrats to Christian Moore, SEC Baseball Freshman of the Week. Batted over 500 with a sweep against Florida. Congrats, beat those Gators. And he was SEC Freshman of the Week. So our men Vols baseball team is on fire. If you're not watching, make sure you get down there to the stadium and watch them. They're exciting to see. Congrats here to the Vols football team. 4-star safety commits to Tennessee. He said he fell in love with the place. See, the Vols, that kind of will do that for you, man. East Tennessee, I try to tell everybody. So we love it here, man. And so Sylvester Smith, congrats. He's a 2023 4-star class from Alabama, 5'11", 195 pounds. And he's coming on board to the team. Super excited to have him. And of course, our men are in action this Saturday, Auburn, 1 o'clock. So make sure you check them out over there at the stadium. That is our Vol update, 60 seconds. Proud sponsor of the Vols, your Tennessee realtor. All right, let's get back on the show, talking about a little Vol action, talk about a little real estate action, talk about, is the real estate market cooling off? And we're talking in the first section about that topic. And we talked about the interest rates. How is that affecting you on the interest rates? And that we know on March 16th that the Federal Reserve, for the first time, raised the interest rates in over 3 years. So it's starting to have a little bit of panic. We're talking about in the first section, some of my clients were talking about that, Ryan, having some nervousness in the market. What are we going to do with everything's going on? Literally yesterday, I said, well, I'm not sure. We may put the plans on hold. And you're not like most people. I mean, that's a valuable question to ask in the market. Should we wait? Should we buy? Should we sell? But most people have questions about it. And how does it affect the market in today's market, whether to buy or sell? What is the Federal Reserve? What do they do? Do they do anything? The Federal Reserve is a central bank. It's a government agency that makes and distributes money, creates policies. The Federal Reserve was created in 1913. A bunch of economic panics and depressions in the 1800s. The Fed was supposed to regulate the economy and keep it stable. Spoiler alert, it didn't work. The government's really bad with money. You can kind of see that, how they kind of spend our money, right? I see it all the time. And here's what they've done, and here's what's going on. When the American economy goes up or down, the Fed starts kind of kicking in rates, and they try to figure out how things to kind of keep our national money system stable. They either raise or lower interest rates. They monitor our risk, our financial system, regulate banks locally and nationally, trading centers like Wall Street, okay, stock market, you've seen that, and managing the national money supply by printing new money and taking old money out of circulation. They have the printing part down pat. Ha ha ha. There's a lot going on. We're just going to focus on with the feds on the interest rates for right now. But on March 16th, the Fed raised the rates. So it's called the federal fund rate. So the federal fund rates is where the interest rate banks charge each other to borrow money overnight. It's kind of the short-term rates. And banks sometimes do that by getting in trouble, not having enough cash on hand at the end of the business day. The Fed also plans to increase the rate several more times this year. So that's why mortgage rates rose in 2022, even before the Federal Reserve did anything. When the Federal Reserve starts messing around with the interest rates the banks pay, it's not long before the people start to suffer. And banks saw what was coming, and they started upping the interest rates to protect their bottom line. So, that's why if you watch the news, if you ever hear the stock market or certain news that's on the like Fox Business or CNBC or things like that, you hear that news and it automatically affects the market. There's no way that the market changed that quickly, but a lot of that pricing is built into the market so that they can adjust for the future demand or less of demand. You say, well, Ryan, if I'm purchasing a home in today's market, should I wait or should I buy now? And then the difference from the rate of, let's say, 3.5% to 5% or 5.3%, will that make a difference? Well, it definitely will make a difference. I kind of got an example here for you, and this is a kind of real life example. Let's do a 15-year. We got Jim and Donna's house, all right? They're both buying a $350,000 house. And then we've got Bob and Cheryl's house, same price, both buying a $350,000 house. Both buyers have a $70,000 down payment. Both buyers have loan payment of $280,000. So we're good there. The interest rates differ just a little. Jim and Donna's house is a 2.24 fixed rate interest rate. Bob and Cheryl's house is a 3% interest rate. Not too far off. We've got the same loan amount of $280,000, 2.24 for Jim and Donna's house. And then Bob and Cheryl's is 3. But in today's market, a 2.24 to 3 really is not that bad. Carry on. Monthly payment for Jim and Donna is $1,833. Bob and Cheryl's house payment is $1,934. So $100 difference. Total interest paid for Jim and Donna's house, that's like when you close, they give you this amortization schedule, and it shows you if you pay all the payments at the end of the loan, you end up paying double for what the house is worth. Very depressing statement. Don't ever look at it. But it shows the financing term for the whole term of the loan. So the total interest paid is $49,928 for Jim and Donna's house at a 2.24 rate. And then Bob and Cheryl's house, listen to this, 3% interest rate. They pay $68,053. So $68,053. So almost $20,000 difference on interest rate from a 2.24 to 3%. Total cost of the loan for Jim and Donna is $399,928. Bob and Cheryl's cost of the house was $418,053. So, $418,053. So about a $20,000 difference, $18,125 to be exact, right? And it's about $100 more a month. So it can get up there, and everybody that's on a budget, which we all need to be a budget, can be concerning. But the higher interest rates may be harder to swallow because we're used to 3.5%, 3%. But it really just depends on your situation and where you live here in the next year or two. Remember, rising rates won't last forever. Things change. The market goes up, goes down, depends on a lot what's going on with the economy. But those who are ready to buy a home, you really shouldn't wait. What we talk about in the first segment, what's your motivation? Why are we buying? I'll go back to some great clients that we met this week, and we're going to list their property. They've got some acreage, beautiful Smoky Mountain views of Mount LeConte, a couple home sites to be put on there. And, I expect that to go really, really quickly. But one of the conversations I had with them was, whether you're buying or selling, there's always a reason of what we're doing. And that reason would be they have several acres out there. And every Saturday, every week they're working hard. And then on the weekend, they got to come here and they take care of the exterior. They're on the tractor, they're maintaining it. 25 acres is a lot to take care of. And then it's like, honey, I never get to see you. You're out in the tractor, you're inside working, teamwork to make it work. And then it's like the whole weekend's gone. How much more in your season of life is that important to you? And how important it is maybe to travel and not spend so much time working out in the yard and taking care of the property, but enjoy life, the golden years, right? So there has to be a motivation for why you're doing it. And the rate's up, let's say from 2.24 to 3 or 3% to 5%. Yes, there's a difference, but it doesn't mean that you're not going to purchase in this market. And actually, for a lot of buyers in the market today, I will encourage you that we saw inventory not go down month over month. What that means is there may be more selection for buyers. Opportunities that if you're in the marketplace, sellers may say, hey, I'm just going to sell this property. Well, before the market changes, gives our buyers an opportunity. Still can purchase with 10 or 20% down. Best way to do it, get your rates where we need to be, get your payments where you need to be. It always starts with that search. Selling your home now is important. Finding your right home and getting the trusted agent. Get an agent that you can count on in this market as the market goes up, as the market goes down, as it changes. The most valuable thing we do this show every week is have an agent and a team that's got your back. We have your back. Whether you're buying or selling, there's no pressure. It's how can we help you in the future and make such a big move? Because it's a big move. Hope you've enjoyed this show. Great show with you guys, and always enjoy being with you. Proud sponsor of the Vols, your Tennessee Realtor, and glad to be here with you every Saturday. If you need me, 693-SOLD or RyanColeman.org.